Okay. This is a late London one. Squeezing this in before the day ends. No worries. Oopsie daisy. No need to pay any attention to the chart. I'm just gonna speak on this one. So it's all gonna be about risk management and mindset. So I haven't been in profit for 2 weeks. Now I currently am. This week I'm in profit. I'm heading into a new week. With that in mind, I know I've got all of my accounts in profit. Just a smudge, nothing too heavy. Like 1%, 1.5. I've still got a couple of quid to make on my evals. Then of course my funded and private equity, I'm just managing, of course. I had a conversation with a new student today, and he mentioned, he suggested I'm just going to risk £50 per trade on my evaluation. And while he was right, I had to express, and even if I didn't enough, I am doing so now. When you're passing prop firms, you want to be dynamic in your approach. So in the beginning, well, this is how I approach passing prop firms. When I treat passing prop firms as a business. So you want to move aggressive in the eval. Then when you're funded, move a tad defensive. Why do I do so? I want to be funded as quickly as possible, first of all. There's a trader called Winner's Evidence. He finally came to realization that he's risking too little. He's risking 0.01 on a 5k account. Of course he is. He's been doing that for 4 months. 4 months. I don't want to do that. I know with my strategy I pass or lose a prop challenge within 1 to 10 days. And I like that. It's good for me. So that's also a personality too. But I like moving through challenges because I want to be funded as quick as possible. Then I want to manage the funded account. Also, from a learning perspective, it's good to get through your evals and trade your funded accounts, because slippage on a funded account and on an eval can differ. And with regards to your whole learning curve of trying to turn this into a business where you're always passing them and getting your withdrawals, that could be another stunt in your whole, oh, I'm not doing this anymore, then you pick it back up again. So if you didn't know that and you're listening, please note that down, be mindful. It's not you, it's not a strategy. Trading prop firms is a total different environment to when you're trading your private equity. So I want you to be mindful of that, all my new students who are moving from private equity to prop firms. And obviously when I'm saying private equity, I mean your own shmoney to buying prop firms and stuff like that. So for myself, I know that I'm going to be risking quite aggressively during my evals, and then for my funded, I'm going to be having a more defensive approach. Brilliant. But with regards to mindset, let's say there's a few traders or a trader who is exactly at the same stage as me. A younger Dylan would maybe feel anxious, fearful, maybe excited. Why is that, you ask? It's because in the past, of course I'm using hindsight now, I wasn't as level-headed. But in the past, when I've come out of drawdown and I've gone into profit, I rarely feel a sense of euphoria like I have done in the past. While I have, of course, I rarely feel a sense of euphoria. I usually return to the, oh man, now I've got some extra money, I can risk more. That's my thing. Like when you're learning about yourself, when you're learning how to trade, me learning about myself is I'm always happy to go higher. So, if there is, or if this is you, chill out, mate. Bear in mind, I had 2 weeks prior of no profit. So, if I'm to go into another week of no profit, it's a lot of losses, mate. I mean, whether it be due to losses or no execution, let's just say it's a mixture of the two. Still no wins. Do you know what I mean? So, while it might be exciting to do so, don't do it. I remember one time, this is when I was trading Steve Morrow's Speed Market Maker, and he was talking about don't risk. He was saying some students who just had the mentality of risking more every time they win a winning trade. And he was like, don't do that, because when you finally take a loss, it's going to sting you. I did that with my private equity once, and I definitely learned a lesson. So I was with a person who was my friend at the time. He said to me, look, Dylan, stop getting on about trading so much. If you can trade, just do it, trade, boom, cool, whatever. Because I was working on my playbook at the time. Cool. Executed it for a week, turned £50 into 300 or 600. I think it's 600 now. I want to say that, of course, for the vid. I think it was 600 quid though. Regardless, this is actually quite funny. I didn't know how to withdraw. This is how early I was in the game. So then after that, I lost the money because I was like, oh, this isn't working, whatever. And then I just lost the money next week. So one good week, next poor week. So, of course, I've lived through this, so I know better now. However, if you have not, because you're a newer trader, hear my words. Moral of the story, cool now. Money goes up and down. Sometimes you make money, sometimes you don't. Don't go gung-ho. In fact, I've got another example of a student who said to me, oh, but Dylan, you're always winning, so I'm just going to put all my money on the next trade. I'm like, no. I actually did go on to win my next 3 trades after that, but still, you can't do that because you don't know which one's going to be the loss. Remember, it's randomized and it's probability. This is what we're working with after your playbook, yeah? Probability. You could be having a poor week, Monday, Tuesday, Wednesday, then Thursday, Friday, clean up. That's how it goes. So please, It's about patience. You want to stay in the game. But if you're going to stay in the game, you must practice good risk management. I do hope this all makes sense. I do want to speak to you guys about something I'm doing soon, but I will just cool off for now. Yes. Contact me, Dylan King Rose, on Instagram, or comment on these videos. Do the liking and subscribing and the commenting and all the things. Thank you for your time.